Welcome to the Path to Ownership Part 3. I hope you guys have been with us through the previous two and continuing on for the fourth that we have coming up in November. But I am Dr. Amber Howarth. I work for Blue Heron Consulting. I am a startup and acquisition coach, basically meaning that I help people acquire or start up their veterinary practices, fulfilling their dreams. And so we have clients come to us literally from the ground and go from the ground up. Or sometimes we have people come in and they're pretty close to opening, but need those last finishing steps. And so we help anyone and everyone along their journey, because each journey is a little bit different than the one before you and the one that's coming next. I also am a part of a startup in Arizona, so that is very exciting to watch it progress and go through myself. And I'll kick it over to Ashley to introduce herself before we get into our key insights for tonight.
Thank you, Amber. Thank you all for being here as well. My name is Ashley Moore. For those of you who haven't met us at previous webinars, and I'm a loan officer with First Financial Bank, and I focus on all things vet and pet care. So as Amber had mentioned, those ground up projects or acquisitions, or when you're ready to dive in to get financing for your practice, whatever that might look like, we're here to help you. And like she mentioned as well, all the projects are, unique in their own way. So we're here to help kind of make a product that fits you and your practice.
Thank you, Ashley. We'll go ahead and jump into the key insights for tonight. We're going to be going through SMART goals and detailing out what that means. We have an example for you. If anybody's willing to share their own examples tonight, that'd be really great. It looks like we have a little bit of a smaller group tonight, which is amazing. So I'm hoping that everybody can access that chat function now and will participate with us if you're willing to type in your answers. Ashley's going to be going over a business plan and some financial things from First Financial Bank's perspective. And then we're going to be diving into a SWOT analysis. I will detail out exactly what that means. And then again, also ask for your participation tonight and see if you guys have anything that you'd like to add to discuss with the group. We will be walking through some very high-level financial projections, one of my favorite parts, but I am hoping I don't lose anybody because I get really excited about them. And if you want to learn more, please talk to us afterwards. I'd be more than happy to sit down with you and go through something like that. And then also what we do with a market analysis. So with that, we're going to go ahead and get started with our SMART goals. So some of you guys may have heard this, some of you may have not, but SMART is an acronym and it stands for S for specific, measurable, the A is attainable, the R can be relevant or realistic, depending on who you ask, and T is timely. And so over time, these can change. This is more of just a method to help you detail out what you need to do and keep you on track and make sure that you are staying within the framework that you have built. Because your values and your mission are constant and are usually going to stay constant throughout the process. How you get there might change a little bit. But again, it's committing this down to paper, down to a computer document that you've made up, and it can work for short or long-term goals. So I have my own example here for you, and yes, I'm going to use everybody tonight as my example. So with this webinar, my specific goal for tonight is to give everybody here the tools that they need in order to start up or acquire their own veterinary practice, or even just get on the path to maybe looking at that to see if it's a possibility for you. I am also hoping tonight that we get people to participate, as I have said many times before, with that chat function. So I'm looking for how many people participate, how many questions we get. We can measure the amount of participants who follow up with us afterwards. So I will kick this over to Ashley. What do you think is a good goal for that tonight? A good measurable goal?
Ooh, I think I'd like to see at least 5. Give them 5. We'll
Perfect.
special
The
star
last
for
I
the first
saw-
one.
Yeah. The last I saw, there was about 10 participants, so that's about 50%. So I think that's definitely doable.
I
Hopefully,
agree.
everybody listening tonight thinks that's doable also, because we are excited to answer any questions or interact with you tonight.
Absolutely.
My attainable is this doable? Do we think we can do this? For tonight, I think that's a definite yes. Is it relevant? Yes, again, it's definitely relevant to what we're talking about. And is it timely? So our timely goal for this, usually when we have startup and acquisition leads, same with First Financial Bank, when they first start off talking to you guys, it takes anywhere from a couple months to potentially even a year when people decide that they want to own and then go through the steps and get someone on board. And so that would be a timely goal for someone coming and talking to us. The sooner the better always, but sometimes it just doesn't happen or things aren't in a line. Does anybody at this point have any, maybe not even the full SMART goal, but just the specific goals that they're working towards, either in practice, just work related in general, in life, fitness, I don't care what it is. But if you're willing to share, let us know in the chat function. Awesome. One person said, learn more about starting a practice. Another person said fitness, which is always another great goal. My husband and I recently just started running again. So Renee, awesome goal to have. Anyone else?
I think mine right now is potty training a toddler.
Yeah. One of our current clients right now is potty training, and I don't have any kids quite yet, but I am learning lots about it.
Getting a crash course.
Yes, an early crash course. Anybody else want to share any of their goals? Man, you guys, I'm just gonna have to start calling on people. No. All right. Well, if you guys want to chime in later, definitely drop them in the chat function. Hope one more did come through. Trying to decide if a buy-in is right for me. That is a really big one and something that can be challenging, weighing the pros and the cons. And I think if you stay tuned in a couple of slides, we will hopefully help you with that answer. I'm going to have Ashley take it away with the business plan.
Awesome. Thank you, Amber. Yeah. So after you have those SMART goals established and kind of really where you want to go with your practice, one of the most critical pieces is a business plan. Now, why do you need one? Right? What does this actually do for you? Well, it's a map, it's a roadmap to get from start to finish for your business, whether that be a startup, acquisition, whatever the case may be. And there are plenty of components when it comes to building this business plan. It really helps you deep dive and get to know your business and you know what makes it different from the competition, knowing your competition, you know, what else is out there, what is your target market, what opportunities are there within that market, and ultimately with this business plan you will use it to secure your loan to get funding to start your business. So this really is, you know, creating that start to finish roadmap for you to get from point A to point B. And one thing that I really do want to point out when it comes to business plans is that this is a dynamic document. And what I mean by that is you don't just, you know, write it at the beginning when you first start your business and then stick it on a shelf and never look at it again. This grows and changes along with your business. So You might have a specific market, 5 years ago when you start, but now when you're looking to maybe expand, that market could look completely different. So you're going to want to really reevaluate and work on your projections and all of those types of things to really build out that map of, where you are now and where you want to be. All right, so a couple key pieces of that business plan. Number one would be your vision. Now, if you listened to us a couple webinars ago, I think back in the first one, Dr. Amber discussed, what is your why? And this is very similar to what your why is. This is, your statement of what you want that business to be. What is your purpose there? What is it for? So that is, obviously a huge part of figuring out, how you want to practice, how big of a practice, those types of things. The mission is your how. How are you going to make that vision come to life? A clear, concise statement. You want to have, your action items in this mission. Now, the executive summary, this you're going to want to write last, but this is what the readers will look at first. So this really pulls together all of those key pieces from your overall business plan that you want that reader to know. You want them to see it first. So if, all that they read is this executive summary, they're going to want to keep, go back and read the entire thing. So again, this is those key components of your vision and your mission.
And I will add in really quickly there, your mission. I always like people to do their vision first and then their mission, just as Ashley said, because it is that statement. And I really like it for it to be that punchline, that tagline that the clients will remember, the staff will remember. It's catchy, something that will go forward as the years go on.
Absolutely. And like we said, it is a dynamic document, but that vision is where you want to end up. So always, as you're tweaking your business plan, keep your core vision in mind. Another very, very important part of that business plan is the marketing plan. So this is how you're going to reach people, how you are going to get new people in the door. So you really want to know, what type of advertising can work for you? Are there community opportunities? Even down to your logo. What are your colors? It's funny. I was just reading a study about how, different colors can affect people differently and things like that. Like, what image do you want to portray with that logo? But a lot of that marketing plan is going to be determined by your location as well. Know your target market, know what competition is in that area and what makes you different. So really, when it comes to locations, you want to know what your potential is within that business. So are you in, an area that has a smaller population, but you're, more niche and you can really serve that area better? Or are you in a larger area that has more opportunities, thousands of pets and people for you to, take care of? So make sure that you have a good understanding of your location, even the physical size. So, you can't, there are physical limitations when it comes to sizing. If you have 10 exam rooms, your opportunity is going to be different than if you have 2. So know that as well. But these two things tie together to help you gauge what the potential is for that practice and what your potential revenues are. So when it comes to the financials in your business plan, if you have an existing business and you're looking to expand, you're going to want to have 3 years of tax returns and a year-to-date P&L and balance sheet. And if you're looking to acquire a business, you're going to want to have that as well. For the projections, these are estimated sales. So these rely heavily on your marketing plan and on your demographics and your opportunities there, that target market. And we always say, overestimate your expenses and underestimate revenues. So you really, really want to know what those opportunities there, and Amber's gonna dive a little bit deeper into those in the coming slides and kind of what that looks like and how those should be laid out. But you want to have at least 3 years of those and know what the benchmarks are for similar practices. Really know, what does a typical 2-doctor practice, 3-doctor practice look like? And that's where someone, somebody from Blue Heron or somebody like Dr. Amber can really help you know what does a good, healthy practice look like, or where, areas of opportunity might be, or really what you should be putting into those projections when it comes to these expenses. But definitely, as on this bottom bullet point here, as your business grows, make sure that you're staffing adequately. So plan on that staffing requirement growing as you continue. And I think we have a question here. Let's see. If I plan on not making changes when acquiring a practice, do I still need projections? That is a very good question. Yes. So, even if you don't plan on making any changes, you're going to have planned growth. Even if that practice was to stay exactly the same, you're going to have growth plans in place. And when you take over a practice and there is an acquisition, you have to plan ahead for some churn, for some clients possibly leaving and for new clients coming on. So you definitely still want to do these projections. And also you might find areas of opportunity that you didn't know were there when you first took over. So definitely still want to have those in place.
Yeah, I definitely agree with Ashley. You have for an acquisition, 10% of your clientele is going to leave regardless of what you do, because they're going to be upset that the old owner retired. And that's just how it is. There isn't really anything that we can do about it, but you will have some client turnover. You might even have some staff turnover, because sometimes they really liked how the previous owner did things, or they're just moving on to a different opportunity. And there are things that I am sure you may go into the practice and potentially want to start. There's always things coming out on the market. Once I graduated vet school a few years back, the new drug on the market had come out, I think after I was 3 months out, and it was just crazy from back then to now, how quickly things have come out, how quickly things have changed. There's new tools out that you want to try. And so there's definitely areas for growth, as Ashley was saying. It's a really great question.
Absolutely. So some additional information that can go into business planning and just planning for your any growth in your business, whether it's a startup, acquisition, expansion, or buy-in. Rather, have your resume ready to go, because us as lenders, we love to see your background and kind of what you bring there. If you're leasing a space, have that lease ready. We do SBA lending, and the SBA has some specific guidelines when it comes to leases. So you want to have that ready to go, and any plans and bids for renovations, improvements, those types of things. Photos of both the interior and exterior of the building, whether that be, and a lot of times when there's startups, you're getting into a building that wasn't a vet clinic prior, and that's definitely understood. Have your credit report ready. Know what your credit score is when you get to the point where you're looking for a lender to start your business or take over a business. Just kind of know where your credit stands, and make sure that you're healthy in that regard. And we've talked about that in previous webinars, kind of the importance of that, and the breakdown there, knowing your personal financials, your assets versus liabilities, and then have all of your applications ready as well. So these things are just supplemental for the lending process to your business plan.
All right, we're getting into the SWOT analysis. And so I think it was Renee who posted in the chat saying that she was weighing the pros and cons of getting into a buy-in. This would be a really great exercise for you to go through. Up top, we have our internal factors versus our external factors on the bottom. So we have our strengths and our weaknesses that directly affect us, and then our opportunities and our threats. And so that would be maybe more of the business. And so, for example, and this is made up But for more so me, I did it a little bit revolving around my personality, but still more of on the meet up side. So strengths, I'm really organized, but let's say one of my weaknesses is I'm horrible at management, let's say. An opportunity that I have is I have Blue Heron Consulting in my back pocket. I also have First Financial in my back pocket, and there's a lot of other resources out there too. But I know that these companies will stand behind me, so that will be an opportunity. And then one of the threats that I maybe have going into this practice is I don't have a practice manager yet. And if I'm already bad at management, it's probably a key piece that I will need going through. So does anybody have any strengths, weaknesses, potential opportunities, anything that they would like to share with the group? Maybe another example of what they are thinking about. Yeah, a couple people put in the chat port delegating, fear of failing. That is definitely a big one, especially when you're getting a big loan like that and either starting up or acquiring practice. Definitely understand.
Yeah, I think we talked about it in a previous webinar too. Most people, they're never going to feel ready. That fear is very real in most people.
Accounting.
Accounting, I think that's
Mhm.
sometimes the accountants can do some fancy math.
Maternity leave out of the last two out of the
Wow.
last 3 years. Okay. Um, wow, yeah.
I can relate. Well, one out of the last three, but definitely understandable.
We're not quite there yet. We will be someday.
No, I think that delegating one is an interesting one too. I know that I've always had that issue, being a perfectionist, and that's it in a sense of strength, but I definitely can understand that delegating and kind of, I can just do it. And there's
Yeah.
only so many hours in a day, so definitely an understandable one.
Yes. Yes. I can definitely understand that one too. I feel like I struggle with that sometimes. Okay. Another one came in. Current owner of the clinic is letting me buy them out. She's planning to stay on board to help with the transition. Yeah, so perfect. So that can definitely be something that helps you if you've never owned a practice or really, really want that mentorship going forward to show you the ropes.
And then that client retention piece too, if they feel that owner's still a part of the practice and there's some continuity there.
Love making protocols. That's a really good one.
Like that.
Yeah, yeah. And that is something definitely, if you are the doctor, you can definitely do. If you're the practice manager, a technician that wants to make a new protocol, I don't think, hopefully not anyone in the practice will stop you from doing that because that's always helpful. But that's a really good strength to have.
I'd say definitely as a practice owner, that's a good one.
Okay, so potential threat, a practice down the street is a big competitor of ours. Yes, that can always be a worry when you have competition in the area. And one of the things that we'll get to here in just a second is a market analysis to see the population and other things in there.
I mean, with that one, I would definitely say, know your differentiators, know what makes your practice different from that one. Maybe they're a corporate, you're privately owned, or, as high level as that, but no, and having that vision and that why, that'll help.
Yeah, offering different services if you're loving acupuncture, rehab,
Right.
massage, even laser, different things like that can set you apart. All right, I'm gonna take last call for the SWOT analysis. All right, I'm going to move on to the next slide, but if anybody happens to stick something in the chat, I'm more than happy to stop and read it too. But like I foreshadowed, we're going to be talking about a market analysis. And so this is probably really tiny for everyone to see all of the numbers. I do have it blown up on further slides, but this is a current client's, one of their market analysis that we ran for them. It's a property that they're no longer considering. So I did black out the information and kept that confidential for this person. But I did talk to them beforehand and they were fine that we use this for the webinar today. So there's 3 pieces that I really care about. I run these for my clients all the time. And I usually do it with a 1 mile, 3 mile, and 5 mile radius, because that's where you're going to be pulling most of your people from. Unless you have a really strong client loyalty, most of the time people aren't going to drive, an hour across town or half an hour across town if there's someone a little bit closer or more convenient to them. One of the big things that we care about, and I caught myself earlier, I said population, I would be incorrect. I care more about households. Does anybody have any guesses as to why I care about households instead of population? I'll pull up the chat here so I can watch it. Anyone have any thoughts on that? More directly related to income and spending power. Yeah, so that's getting close there to what we're looking at here with the household. Anyone else have any guesses or ideas? The kids can't sell enough lemonade. Population includes children, which won't be clients. Yeah, so all of those were really right on the mark. You guys nailed it with that. I don't really care about the 2-year-olds in the population. Yes, they're super cute, but they're probably not going to be the ones driving into the vet clinic.
Not selling enough lemonade.
Yeah, to take the dog in for their annual appointment or when the cat's sick. So that is one thing that we look at in the area. And I don't really care about the census for 2020 anymore because we are in 2022. So those are numbers that I just ignore. And then I also ignore the 2027 numbers because those are projections and I'd rather have the hardcore set in stone numbers for this year. And so in this particular area, they had a really good population size for just being 1 mile out. Our next, as it was predicted by one of our participants, was our households by income. This is something else that we also look at. And one thing that we always try to see is where that bell curve, going back to our math classes or statistics class, where that falls in this. And this one has a really good distribution of people, anywhere from this $50,000 range all the way up to this $200,000 range, which is really good because we want our clients to be able to support the practice, be able to bring their pets in when they need help with different sicknesses, illnesses, just to talk about conditions, other things like that, soft tissues. I'm sure I could list off many more, and I'm sure you guys could too. And then we also look at population by age, going back to, we don't really care about the 2-year-olds. So I'm hoping that most of my population by age is not in those categories. So we're really looking for 20s and above, and usually in this range right around here. A lot of times when you get into retirement homes, your clientele is starting to drop off a little bit, just because sometimes some of those homes aren't allowing pets in there. And so for this particular example, we have a really nice bell curve with our starting at our 25 to 34 category range and going up to our 55 and 64 range. So this would be a really good 1 mile census market analysis to have for a clinic going in this particular area. And not all the areas look like this. This is more of a city area. I will say I have had clients that open up in a more rural area, and the numbers are not quite as compact or as tight in this example as they are for those, and that is fine too. What I will do is I'll go back here for a second, and for our household size, you usually want 2,500 households, usually supports 1 full-time DVM. So that's what we're looking for in that area as well, to support a DVM. And even it doesn't have to be that 1 mile radius. If it's in that 5 mile radius, that's a conversation to have with a coach or whoever's guiding you through the process. Now we get to the fun part, and I am going to try to hopefully not overwhelm anybody tonight, but I would love to have further conversations with you after the presentation is over about these. So I'm going to attempt to stick to the high level points and not get too excited. It looks like we do have a question though that I'll get to before we dive into it. Is this data easy to get on your own, or is it purchased from a vendor? So when I go and do these, I do purchase this through a company that Blue Heron Consulting works with to get these numbers. I am sure you can probably Google out there and come up with your own information. I have not tried it myself, so I am not exactly sure about that, but as people like to say, Google has a lot of information, and as veterinarians, we like to joke around that Dr. Google knows it all.
I would just to kind of piggyback off of that, I would say you can get some good general information off of Google, but if you're really looking to get concrete information, if you're really investing in an area or a practice, go with somebody who really knows. Go with a company or Blue Heron or something that can get you those exact numbers, because it, just as with Dr. Google, it can be a little bit skewed.
Mm-hmm. Okay, Ashley, are you still able to see my screen?
The financial projections did not pop up.
Okay, so I'm gonna do. How about,
there we go. We're good.
Awesome. Okay. All right. So these are our financial projections. I did a make-believe situation in here. So these are all make-believe numbers, made-up numbers, whatever you want to call it. For the purposes of this, I put in 2023 because that's next year coming, and that I was going to be a single doctor practice, because I'll use myself as an example here. We usually put in how many patients per day the client wants to see, and we start off conservatively. I'd rather, as Ashley said earlier, underestimate the revenue and overestimate the expenses, and I don't want to set anybody up for failure. So I go very, very conservatively on these, and I let everybody know that too. And so some of you might be thinking 10 clients per day, that's way too little. Maybe some of you are thinking that's way too much, but that's where I started this one, and then walked myself up to the 14 and stopped it there. We put in the working days. I've had some very unique and very interesting schedules come in from clients. So it just really depends on what you want to do. This is just a Monday through Friday schedule here. And then I put in my made up average doctor transaction number here. The average, according to AHA, is about 187 right now, and it fluctuates depending on which area you live in. So I kind of went in the middle and did 215 and walked myself up to 230. And then our projections estimate how much revenue I myself am going to make as the doctor. And then it breaks it down further into our retail invoices, things like the toenail trims, the anal gland expressions, the dog of bag treats that's at the front counter when you're exiting, things that you're not really overseeing that people are buying to estimate the retail revenue. And I do apologize that some of my cells here are a little smushed, but that's just calculating down here the total estimated gross revenue with your doctor revenue and those retail. And then if we scroll all the way over here, it gives us the total for this year. And then it also breaks it down into percentages for us. So if we go down a little bit further, and like I said, very high level, the gross revenue for this year is one of our key performance indicators that Ashley mentioned at the very beginning. It's just how we track the progress in our practices. And so that's the first one we'll talk about. Our second one is our payroll. And so we have it really broken down into every single employee that you're going to employ, their wages over here, how many you would like to be working for you. And then we also have all of our national averages. We put in VMG's national averages. And then also if you work with Blue Heron Consulting, we have amazing operational and medical coaches that give you many tips and tricks to get these percentages down to help your key performance indicators, your KPIs. I might switch back and forth between those to get those looking really well, and then also to increase your bottom line, which we'll look at in just a second. And so one question that we always get here is, oh, if I start up or even if I acquire a practice, I'm never gonna, have enough money, or I'm not gonna be able to pay myself until 5 years down the road or 3 years down the road. We get quite a few things thrown out there. And in our projections, we make sure that you as the DVM pay yourself first. This is going to make your profit and loss statement a little bit cleaner. This is going to help out with your taxes. This is probably going to help your family out too, because you shouldn't be taking $0 home every single month. And then thinking about your exit strategy, which is something that everybody should think about when they're going into a practice. And I know early on, it seems weird to be thinking about that, but life happens and things happen that you need to be prepared for. It'll help your practice look better to that future buyer. So right now we have it at 21% here is what your owner DVM salary should be. We also have, I'll highlight management right now. Your management wages should be anywhere from 3 to 5%. We usually put 4% in here. For this make-believe example, I have sometimes owner DVMs, when they're starting up a practice, they want to learn the ins and the outs of every single aspect of their practice first, or sometimes their husband's helping them, their spouse, whoever it is. So for my made up example here, I'm going to be doing all the management stuff too, because like I said earlier, I'm horrible with it and I want to learn more. So I put it at 2%. So it is a little bit there and it's a placeholder for that money. And then we walk it down a little bit further and we have our employee benefits and our fringe benefits here. I set it a little bit higher, and I always, when I walk through these with clients, say to them, it's hard to find really good technical staff and it's really hard to keep them. And we have a really high burnout and turnover rate in veterinary medicine. It is your practice at the end of the day, so you can choose to do whatever you choose. But I always like to put the argument in there that if we are hopefully trying to close the wage gap a little bit, we're offering really top tier benefits like the VMG top 20% of hospitals are, hopefully we can keep and retain our staff. And so our big KPI, our total payroll right here is calculated. Right now it's sitting at about 41.8%. So it's a little bit lower than the national average, which is this 40% to 42 is the non-BHC coaching. National average is a little bit higher than that even. And if you work with BHC, we usually try to get it to about 39%. So hopefully this isn't too much into the weeds for you guys. I will try to keep it brief, but I obviously love these. I think the numbers are a lot of fun and they're not pulled out of thin air. There's a method behind our madness for this. As you can see, there's a lot of calculations in this Excel document. And so our next category is our variable expenses, our COGS, cost of goods sold. And as you guys can see, it's broken down in these categories here into the drugs and medical, lab radiology fees, diet, retail costs, and our miscellaneous animal care costs. And so you might not be spending on retail costs exactly, these numbers every single month, but they're more of a placeholder for right now. And so here are all of our percentages, and then it also shows you the gross revenue and what the averages should be. Excuse me. I'm getting over a cold. All right. And so, oh my goodness. I had a flare up in the middle of our presentation, but our total cost of goods sold, or COGS, here at the bottom is sitting about 21.2%. The national average is about 23 to 27%. And our BHC hospitals that we continue on coaching, we try to get them to that 18 to 20%. And that's because if you can save on your COGS and still do medicine efficiently, that goes back to your bottom line. And like I mentioned before, our operational coaches have a lot of tips and tricks to help you with that. All right, our fixed expenses and our facility expenses. So we have these all detailed out here, our utilities, phone, internet, things like that. And as I said before, again, maybe for your phone and internet, for your office expenses, it's not going to be $1,082 every single month, but month to month it might vary. And at least we have that cost in there as a placeholder to make sure that we're accounting for it throughout the rest of the year. And so for our startups especially, I always like to see 1.5% to 2% for at least the first year of marketing, because it is your first year open and you do want to hit the ground running and making sure that people in your community know that you're coming to the area. I also left in BHC coaching as a placeholder too, just to show that it's not going to break the bank for coaching, and it actually will help decrease your numbers, decrease your key performance indicators that we want. Obviously, we want our gross revenue to go up, but our cost of goods sold, payroll, things like that to trend down. And so we also put in your specific equipment lease, because that's going to change for everybody, your building lease, and your loan. And this is all very individualized to what you are doing, whether it is a startup, whether you're owning the real estate, acquiring a practice, what that looks like specifically for you. And so the total expenses for this scenario is 93%, and our net is about 7%. So with this, it looks like by month 4, I am going to be producing something every single month from then on out, whereas the first couple months I was in the negatives. And so that is common for startups. It is common for startups to be a little bit lower on the lower end here with the net income, because it is your first year open and you're probably not going to have the books 100% filled those first few months. And so the national average for hospitals is about 8 to 10% of the gross revenue. 9% and lower is considered a no-low, which we went over in one of the earlier webinars. But just to recap on that, it just means that you're not generating enough revenue to really invest back into the practice, invest back into your staff, and even into yourself to have it be worth something when you go to sell it. The VMG top 20% of hospitals sit at around 20 to 25%. And for BHC, for our startups, we want them to be above 5% the first year and really start climbing, getting into that 15 to 20% as time goes on. And so we have a year 2 here down at the bottom, a year 3, and loan information that we put in to make it very specific for you and for your needs. But that was just a high-level overview, and I'm so sorry my throat got in the way of that, you guys. But that is a very high overview of it, and I hope I didn't convince any or didn't overwhelm anybody with all of the numbers and going through that so quickly.
Yeah, and just to, piggyback off of that and, when touch on a couple of things that you had mentioned, Amber, you really want to make these, realistic. These aren't just pulled out of thin air. And we alluded to that before. So really all of these pieces that we talked about previously, knowing your demographics, knowing, what potential there is, really knowing what the size of your practice, here, how many DVMs do you want to have? That's going to make a big difference in your overall projections. And then knowing, do you want to own the real estate? Do you not want to? Do you want to lease? When you look at that total loan size, the amortization of the loan, how many loan years you have, what that cash flow looks like. And keep in mind, though, if you buy the real estate, you become your own landlord. So that rent expense works a little bit differently, where you can pay yourself rent as the landlord. So keep those things, everything there comes together to get that final number. So, when you're going through this, again, just make sure you really know the pieces that are going in there and, what potential you have essentially.
So for our made up situation, Ashley, will you give me the funds?
I think we can, can work it out.